Hey, what's up, everybody? Doug Shoemaker here with the Shoemaker Loan Team at Homestead Financial Mortgage. I am here with your weekly market update. And I know that some of you just want to know what time it is. You're not trying to sit around here and try to figure out how to build this clock. So, for you, here's the short version of what we're going to talk about today. Last week, inflation, it actually came in pretty steady. It's still above what the Fed's looking for the target that they're looking for, but it was at least steady. It wasn't going up drastically. Existing home sales, they did dip a little bit, but the good news is inventory is looking much better than it was last year. And what about new home sales? Well, they're absolutely surging. Now, we think probably in large part due to the dip that we've seen in mortgage rates lately. So, on that note, let's go ahead and look at what mortgage rates are looking like, at least as of the close of business today. And this is the national average that we're going to be looking at here. So, the 30-year fixed rate, that was at 6.38%. The 15-year was 5.9%. FHA's 30-year fixed rate was 6.07. Looks like the 30-year jumbo was 6.28, and the 30-year VA rate was 6.09 as of close of business today. Now, as I said, these are national averages for banks and mortgage companies. Now, some of these banks and mortgage companies charge discount points and origination fees or both. Some might not charge either, depending on your circumstance. So, depending on whether or not you're a first time home buyer, you have good or bad credit, you have a large or not so much of a large down payment, your debt ratio, these things are all going to matter. And in some cases, even whether or not you're a first responder or maybe a military law enforcement or firefighter, there's in a lot of cases special programs out there that you'll always want to check into. Now, always feel free to reach out to us because I know this is really confusing, especially for our first time home buyers. And we'd love to offer you a complimentary analysis where we'll go through a lot of this stuff with you. We'll put together a plan for you. We'll look at what's the best loan type for you right now, what rates might you qualify for, and maybe if you need a little bit of extra help on credit scores or something like that, we've got software that'll help us help you learn how to do that as well. So always be free to reach out. We are not going to bug you to death to do something before you're ready. We just want to make sure that we're here for you however you need us to be whenever you are. So here is what time it is. No real data last week, at least nothing that really changed the market. We're still waiting to see what the Fed has to say on inflation and jobs numbers. And the report at the end of this week and then at the end of the month are going to make a really big difference. Rates are probably going to bounce up and down, maybe by, I don't know, a quarter or 3/8 of a percent, unless we see some major data on Friday. And if something big happens, you can always check out the Shoemaker Loan Team on Facebook because I'll probably get something posted on there if we see something major. Otherwise, make sure and check us out again next week where we'll have the update of whatever took place on Friday. So, all right, if you're still with me, let's roll up our sleeves and let's get to some details about all this craziness that's going on. So, August inflation report came in right on expectations. The personal consumption expenditures index, or PCE, it rose by zero point 0.3 for the month. And that actually nudged the annual inflation rate from 2.6 to 2.7. Now, the Fed's favorite measure is core PCE, and that actually strips out food and energy because those things can have some pretty wildly swinging prices. So core PCE was up zero point 0.2 in August, and that just stayed flat at 2.9 year over year. So what does that mean exactly? Well, if you remember from last week, we talked about how the Fed's kind of stuck in the middle here. Inflation isn't quite back to the 2% target that they're looking for, but the job market, it's also clearly showing some cracks. Now, that push and pull is actually why we saw the Fed cut rates like they did on September 17th. And they also warned about rising downside risks to employment. The big thing to watch is the September jobs report on October 3rd. Now, that's going to be a major factor in what the Fed decides at their October 29th meeting. And just a quick refresher, everybody, that the Fed, when they move Fed rates, they're actually adjusting the Fed funds rate. That's the overnight lending rate banks use with each other. Now, that doesn't necessarily affect long term lending rates. It'll affect more short term things like personal loans or car loans or maybe even credit cards, but it doesn't necessarily tie directly to mortgage rates. But It absolutely influences them along with a bunch of other economic factors, as well as details about you. Now, speaking of jobs, initial jobless claims came in at 218,000. That's actually the second straight week of declines after hitting a 4 year high. Now, that sounds really good, right? Well, fewer people are filing new claims. But here's the flip side: continuing job claims, that's folks who are already on unemployment, they've stayed above 1.9 million for over 18 weeks in a row. So the translation here is people aren't losing their jobs quite as quickly, but the ones who do, they're actually having a much harder time finding new work. And that's actually another sign of a cooling labor market. On the housing side, existing home sales in August were basically flat. They were down zero point 0.2 from July, hitting an annual pace of about 4 million units. Now, inventory dipped slightly from July, but there's a bright spot here. The 1.53 million homes on the market, that's up nearly 12% from a year ago. That's a 12% increase in inventory. And inventory is that word, guys, that we've all been talking about for years. That's great because that's just a lot more choices for buyers. Now, keep in mind, these closings reflect buyers who were out shopping back in June and July when mortgage rates were still a little bit higher. So, since rates started easing in August and September, we should see stronger sales show up in that data pretty darn soon. And as Lawrence Yun, chief economist with the National Association of Realtors, put it, the combination of lower rates and higher inventory should be good news for buyers moving into the fall. Now, here's the fun part: new home sales absolutely jumped in August. They were up nearly 21% month over month to an annual pace of 800,000 units. Now, that's the fastest pace we've seen since early 2022, and it beat expectations by a mile. July's numbers were revised higher too, from 652,000 to 664,000. So the trend is definitely moving up. Now, this data reflects contracts that were signed in August when mortgage rates had already started to drift lower. So it makes sense that buyers jump back in. But there's a catch here, too. Now, of the 490,000 new homes that were listed for sale, only 124,000 of them were completed and move in ready. The rest of them are still under construction or construction hasn't even started. So while demand is really strong, supply of finished homes, even though it's up, it's still pretty darn tight. Now, the economy itself is also showing some strength. The final reading for Q2 GDP, it came in at 3.8% growth, which is actually up from the earlier estimate of 3.3%. Now, that's a sharp turnaround from Q1, where we actually saw a zero point 0.6 decline. Now, the big driver: fewer imports. Businesses wanted to, they just weren't stockpiling nearly as much. Plus, a solid boost in consumer spending. For the first half of the year, the economy is averaging about 1.6% growth overall. And because it's not all about numbers and charts around here, let's go ahead and switch gears for the family hack of the week. I'm a little bit behind on this one because I actually saw this thing or read about this yesterday, but it sounded quite lovely. So I decided to share that with you for today. So Sunday, September 29th, was actually National Biscotti Day. So if you want to treat with your coffee, try making pistachio biscottis at home. It's a whole lot easier than you think, and it makes about 2 dozen cookies, actually. I'll put the full step by step recipe right down in the description below so that you can bake along. It's actually a perfect reason to celebrate your morning or your coffee or both. And you'll actually have something crunchy to dunk in your morning cup next time you watch the next market update. So to wrap it all up, inflation steady but still above the target that the Fed is looking for. Existing home sales, they did dip a little bit, but inventory's up more than 12% compared to last year. New home sales are booming, even though move-in ready supply is still quite a bit limited, and GDP shows that the economy bounced back in Q2. This is Doug Shoemaker with the Shoemaker Loan Team at Homestead Financial Mortgage. Thanks for tuning in. Don't forget to check out the biscotti recipe in the description. And I'll see you back here next week with another update.